Many investors and traders are claiming that volatility is dead because we haven't seen it in a while. It's been over 41 days since we've seen a 1% drop and over 300 days since we saw a 2% drop in one session. But could that all be about to change in July? Today, we take a look at how the market rejected some very key pivotal points and how it might now be setting up for what we call a waft distribution. Dark pool activity and large Wall Street bets seem to be making a call as well. In today's video, we explore why some of the market leaders are starting to fall behind and whether that's a good or bad thing for us as investors and traders. Stocks, commodities, and cryptos are coming up in our special weekend edition. Let's get into it. Hello, ladies and gentlemen. A huge welcome back to the special weekend edition of Markets Around the World. My name is K2, and as usual, we'll be covering everything from the latest data and macro news stories to the key levels you need to be watching. Let's start with the news. First, the labor market was too hot for the US stock market. Now it risks cooling too quickly. Investors have been flocking to mega-cap stocks for safety, awaiting Federal Reserve rate cuts. The idea is these companies will remain profitable even if the economy struggles. However, a more worrying narrative is emerging. The job market may quickly deteriorate. The reason it's dominating the discussion now is the rise in unemployment, said Kevin Gordon, senior investment strategist at Schwab, noting its increase to 4% in May after 2 years below that level. Once it starts to creep up, it's hard to stop. The fear is that the Fed might lower rates to aid a struggling economy, rather than ensure a soft landing. Job creation averaged 250,000 a month in the first half of 2024, according to Bankrate's Mark Hamrick. He expects June's report, due Friday, to show steady unemployment but weaker hiring. Boeing Co. has agreed to buy parts supplier Spirit AeroSystems Holdings, Inc. in an all-stock deal worth over $4 billion, Reuters reported Sunday. Sources told Reuters that Boeing will pay $37.25 per share, valuing Spirit at $434 billion. Spirit shares closed Friday at $32.87, with a market cap of $3.83 billion. The boards of both companies agreed on the terms Sunday, with an announcement expected Monday. "We are not commenting on speculation on this matter," said Spirit spokesperson Joe Buccino. Boeing did not respond to a request for comment. Spirit, Boeing's largest customer, has been in buyout talks for months. Boeing revised its offer from all cash to all stock in late June. The stock market has performed well this year, showing the impact of index weighting. The S&P 500, weighted by market cap, has returned 15.8% with dividends reinvested. This benefits investors in low-fee index funds, like the $542 billion SPDR S&P 500 ETF Trust. The NASDAQ Composite and NASDAQ 100 Index have each returned 19.4%, tracked by the $286 billion Invesco QQQ ETF. The Dow Jones Industrial Average, not weighted by market cap, has returned 4.9%. President Joe Biden's family gathered at Camp David on Sunday to encourage him to stay in the race and continue fighting, despite criticism of his poor debate performance against Donald Trump. The family, including First Lady Jill Biden and son Hunter, expressed confidence in Biden's ability to defeat Trump and serve another 4 years as president. They discussed concerns about how Biden was prepared for the debate by his staff and debated whether improvements could have been made. Biden's campaign has been working to reassure donors and supporters following the debate, where he appeared raspy and gave convoluted answers. Let's delve into some macroeconomic and data analysis. Is the S&P 500 poised to maintain double-digit growth at the midpoint of the year? Historically, full-year performances have rarely been lower, with an average increase of 25.1%. Looking ahead, the remainder of the year typically sees an average increase of 7.7%, with a median of 9.8%. Moreover, this upward trend has been observed in nearly 83% of cases. This suggests a strong historical precedent for continued growth in the S&P 500 throughout the rest of the year. Investors may find reassurance in these statistics as they navigate market dynamics and plan their strategies going forward. July has historically been the best month for Nasdaq, QQQ, since 1983, suggesting potential upside for XLK and other tech stocks. However, caution is warranted, as April, typically strong for stocks and tech, saw declines in 2024. The question remains, is 2024 different? Is the U.S. labor market at an inflection point? Continuing jobless claims surged to 1.84 million, the highest since 2021, and the 4-week moving average rose to 236,000, the highest since September 2023. May saw the unemployment rate climb to 4.0%, the first increase in 2 years from April's 3.4%. Further indicating a softening, the ratio of job openings to unemployed people dropped to 1.2 from 2.0 in 2022. Could this signal an impending spike in U.S. unemployment? Hedge funds are selling U.S. tech stocks at the fastest pace in at least 7 years, according to Goldman Sachs. Semiconductor stocks have seen the heaviest selling, followed by software and internet stocks. This trend follows a strong performance in tech sectors, with the Nasdaq 100 up 18% year-to-date and 40% since October 2023. Meanwhile, the semiconductor index, SOX, has surged 30% and 70% over the same periods, exceeding dot-com bubble levels relative to the S&P 500 and nearing all-time highs. Are hedge funds becoming bearish on tech?